Hey everybody. So we're going to get into this today, and this is going to be our Wednesday recap. And just for the new people or new subscribers that are following along for the first time, what this is really about is we go over a recap of stocks that I find the most interesting on the day and the ones that have the most potential. It usually comes from a list of not only myself, but some of the followers that are on Twitter that have positions that are somewhat concerned about them or interested in them and are looking to take a position. Who this video really is for people that want actionable buy and sell ideas that they can then implement in their own strategy, and also for people that want to be educated as to the best way to possibly come up with their own process and utilize some of what I do and then make their process just a little bit better. And as always, this information is extremely timely, so consider subscribing to the channel and clicking the notifications. So let's just jump right on into it. So the very first one that came up today was this RMNI. I don't know anything about it. I know that there was a gentleman that just simply sent me a text about it that he was interested in it. I mean, let's get rid of the indicators for a moment. Just look at price. You can see clearly that this 878 level is an issue, right? So bonk, 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 and we keep hitting it, and we can see how that's not the best. That's not really what we're looking for. So I really think that with something like this, what you want to do is you want to wait until it breaks that level, and then kind of go from there. And we're just not really there yet, are we? So let's see how this plays out. But right now, this is not something that you need to be into. I mean, I just don't see it. I like the spike, but then you just had the reversal, and that reversal was pretty nasty. So, let's just hold off on this. We could throw in the indicators, see if you can find something exciting about it, but there's just really no love to give to this right here. The 5 and the 8 day are rolling, and they're crossing, and the 21 day is crossing. So this is just not something that makes a whole lot of sense for us right now to be invested in. So, with that said, let's just move on. AMC is one that I've just been, pounding the table on Twitter since about $9. We got in it before a while ago, and it had the run and everything. But really, most recently, we were looking at this here, and right here on this wedge break. And we can get rid of these indicators for a minute so you can just see a little clearer. But you can see this wedge break, right? And then now you're here. We broke up, and we tried to get up to this resistance line, and we were just unable to today. Earnings are out this evening. Stock's trading right around like 10.5, something like that. So, look, it is what it is. I mean, I think that this thing is setting up beautifully, and I'm going to let's do this for a moment. I don't think this move is over. I just really don't feel that way, and I just want to kind of go through this. This is the weekly chart from May 17, 2017, and you can see this line right here. And this, we broke it. We've never broken underneath this again, and I think that's really important to note. And this 771, we broke above it, pulled back, and then we closed above it, closed above it. This is the third week that we're above major support line. So I think that could continue. And we're building here, and these bars are getting bigger and bigger, which usually means a change of trend. See how these bars are smaller? See how they're getting wild, and we're coming out of a downtrend? That usually means a battle's going on, and that's what we're seeing happen right now. So longer term, I like this. Theaters are going to open. People are going to want to go to theaters, and they have the capital to stay around. So, I don't want to get into the fundamentals because I trade technically. But right now, I'm stuck between 13 and 771. And this is definitely something that I would keep on my radar. I do think this thing's going to be around for a while, and I do think it has potential. This was when we traded in the newsletter, and I believe we just got stopped out of it. We didn't do well with it at all. This was one I actually added to myself today. I really liked this pattern, this double bottom. And so like most technical double bottoms need to break. So in other words, they need to break the previous low, and that's exactly what transpired here. That's like a true double bottom when it undercuts the other one and then rallies. So you undercut, you rallied here, you had this little base, and then what happens? we broke out and we go right to here. And there is resistance here. And we, throw in the bells and the whistles and the indicators. You can see the 5 and the 8 are setting up to cross. And you can see that the 21-day is right where we closed. And we're above the 50 for the first time since this correction. I like the action, and it looks to me like we could go to the 13-14 level. There's rumors floating around about it, and I don't really want to get into that because it's all conjecture. It just seems to me that we bottomed here. And if you really get technical, and people know that I love to get technical, look, I mean, this is pretty clear what happened here today. Here's your wedge, right? Here's your downward trend. And as always, we clone these lines. And the reason we clone them is so that we can get the same trajectory, because that gives us our true channel. And you just can lie it right in there. And you can see how we just ride that, right? So there's your channel. There's your break. And look at where your break was, right? So your break was on the open, was over the channel. I mean, it doesn't get any better than that as far as a technical indicator. So, and you have this huge bar, and we ran on the news. Now, if you really drill down into this one, really drill down into it, we can get into the 15 minutes and take a look there. And you could just see these volume spikes. All of a sudden, boom, boom, people just had to get in them. And that's important. That's important to note. So that's definitely one I would have on my radar. So this is oil, Vail. And we've been looking at this. And there's a couple things I want to point out here. Oil is going to move on the 10-year Treasury. And I'm going to say that again. Oil is going to move on the 10-year Treasury. Copper, silver, they're all going to move on that. And what's transpiring here is this. Okay, you have a wedge now here, and we could duplicate that to here and this other one here. But before we even get into all that and complicate this, higher high, lower high, the 50-day. Now let's get rid of, well, let's do this very quickly. Let's go back even further, because this is really important. This is Vail. Okay, this is a monthly chart on Vail. Okay, now look where you are on the 200 month and how you're above this here, right? This is a major trend, but the issue with it that I see is right here, right? This level right here, we can't get above it. Every time we poke our head above it, we're coming back down. So this could reject and roll again over the next 3 to 4 months and come in. So I would be really apprehensive here getting into these. And I think that you already saw signs of it today, and I might as well do that chart. But looking at this, you can see how we're rolling. And now these moving averages are coming in. At worst, it's going to flat, or at best, it's going to flatline. And where would I buy it? It'd have to break above this, which would confirm that 200-month move. But let's just look at this today, because this is really important. I was going to get that technical about this, but this is really important. We've been talking about this in the newsletter, and if you don't get the newsletter, subscribe to it. It comes out 3 times a week. Actionable ideas, indexes, commentary, and people seem to like it, and it's free. So I think we're up to 2,000 subscribers on it right now. It's only been out a couple months. So what you can see here is these are the levels that I marked in the newsletter, right? This was a key level, this 194. If we got up here, we were just going to watch a lot of selling going. But this 155 was critical. And what you're seeing is you're seeing us reject it, right? We reject it, close. We try to close over it, rejection, rejection. The highs of these days are now becoming that 156 level. So that's really very key. Now, yes, we did break the downward trend, but that doesn't mean that we can't go to $1.25, and if that happens, tech will fly. If tech's flying, I do not want to be in this oil trade. I do not want to be in Vail. I just don't want to be there. So just keep that in mind. Keep that coordination between those two in the back of your head, because that's what could happen. And I think they priced $38 billion worth of treasuries today. That 10-year went off at 152, something along those lines. So that tells you where they think the yield's going. There's not really much to talk about here on this one. I get the interest. It looks like they got an FDA approval. I announced this on Twitter, and if you don't follow us on Twitter or follow me on Twitter, I don't know why I say us, but if you follow me on Twitter, I throw out these actionable ideas when they hit. I threw this out when it got halted and the FDA approval. This was pretty clear. If you're a thin stock that everyone had their hopes up when this was going on years ago, and you finally get your approval, I mean, the stock's going to run. Do I think that this moves over? It's over for me. I mean, I'm out of the trade, but what would I look at here? If I can get above this, right, and let's overlay the indicators now, right? Like you see how these are we've just been basing. I mean, you have a 2-year base here. This is not going away if we can get over this. So really what I'd be looking on the weekly is if you can flip 22.5, 23 up here, this becomes very interesting because that means that this could start pushing and start going up by multiples, 35, 42, and people are going to say, how am I arriving at those levels? And I'll just show you. So you're here, and some people would even say that this is of significance. But you can see 35 level, 42 level. So this has potential, and this may not be over. Now, it doesn't mean that it might not consolidate before then, but when you're up this high, you want to watch your downward trend line and have that broken before you jump into it. Open was one that we traded at on the, I think we traded that at 32 and then moved on. I don't remember the exact price. I know we did it in the newsletter, and I know we didn't do very well with it. We were very disappointed with it because we really thought it was going to move. And yep, so look, all these notes are still in here. So let's get into it. Now we lost 50 cents. Okay. So here's the thing. This is this trade. I might as well walk through it. I mean, here was our wedge. We broke here. This was our buy area here. When we broke through here, this was the upper channel. When we hit the upper channel, it rejected. Once it rejected this upper channel, that was it. It was over. And you can see that. And I say this a lot, and I just want to point this out to people. And you clone these lines. No, I don't want to create that. You clone these lines. It won't let me clone that because it's a ray. But you can see this here, right? I mean, you can see how that's pretty much the same trajectory. I'm not going to get too fancy. But you can see that, right? And usually if you break here, you're going to go to the median of these. Usually the median is the 21-day. But this is what happened, right? And now we broke. Now we're down here. Look, you need to flip back into this channel as soon as possible, because if not, and this is why I say you need to flip into them as soon as possible, if not, this 50 is going to start curving down even more, and the 21, and then this is going to get ugly. Now, today we saw some key levels that needed to hold on some stocks, and we're going to get into it. And at the end of this, I do want to give you one idea that I think can move tomorrow and might even be in the newsletter. So here's Rocket, and look, I mean, we talked about this, right? This is major support, 23.5. You pulled back there. They did their special dividend. People thought it was going to run today on the short squeeze. It was more of a bull trap than anything. But you had this huge move here. I mean, this was it. Blow it out, move from there. You have all these people that closed here and opened here. So just so you understand that, you closed here, right? Everybody went home feeling warm and fuzzy. And then you wake up the next morning and it's here. And what do you tell yourself? The majority of people sit there and tell themselves, oh, I'll just hold on to it until it comes back. And then it's 1, 2, 3, 4, 5, 6 days later, and guess what? You're still in this, and you're wishing you sold here, right? Your first loss is always your best loss. And I'll say that again. Your first loss is always your best loss. So if you bought it here on the close and it does something crappy like this to you the next day, right? You should expect it anyway when you have a move like this. But if you just got caught up in the moment, got a little FOMO, you see this happen to you, just blow it out and move on with your life. It'll save you weeks of angst and aggravation and let you apply that capital to other areas. So you see how this is trying to break out here? You had a failed breakout right here. And you can even see this line. Actually, that's kind of interesting, right? You can even see this line goes all the way to like back. Yeah, this is really the line. So you're really right here. So you can see this line, right? Cuts right across here, but you can see how it hit here, 2785. Sorry, it's been a long day. And you can see we tried to break above it. So that's your swing now. You want to look for a pivot, you want to go long, that's it. And let's throw in the indicators. I mean, they're a mess. So they're just an absolute mess. This one's pointing down, this one's pointing up. These two are just way off. We have not fallen back into the lower trend, but let's just see what happens with it. This is not something I need to be in right now. QFIN, you know, there's something going on here just by looking at this, and let's leave this in. So we looked at this before, and we looked at this before, obviously. This is really interesting. And let's get rid of these for a minute. And I don't know whose idea this was, and I should go and take a look, but look at this. So you broke out here yesterday, right? Nobody's really talking about this name. This is kind of really interesting. Now, look, here's your wedge, right? And as always, you can clone these. I really like this the more I'm looking at it. See how we clone that? And see how simple it just falls right in there? Boom, right on those lines. And you could pull it back a little further, actually. You can actually pull it back to here. Oh, wants to be difficult. All right, well, that's what we get. Yep, so there you go. And you see where the close or the open is. Okay, so look at this. Open the day before. The low. High is the close. That's about as bullish of a green bar as you can get. So I'm going to say it again. You see that open is the low, close is the high. It doesn't get more bullish than that. Now, what do we do today? We have what I consider like I'll clean it up and call it a screw bar. And it's called a screw bar because it screws everybody from buying it. It closed here and we open here. So you close right at this 25 and a quarter, and now you're going, man, I really wanted to be in this. Now I got to pay up. Well, everybody paid up, right? And then you closed here. And this was not an easy tape today. This tape was a mess today. So what does that mean? Well, now I'm above the wedge, and look at this line. Right? I'm also above this old upper trend line and back into this channel. Last time this happened, the stock went parabolic. So this is a very simple trade for me if I wanted to be in this. And I do like this idea. Look at how we have the 5 and the 8 crossing, and we did a little video on that before, as everybody knows. And new followers maybe don't. But we did a video on this and the significance of a 5 and 8 crossover on both sides on the moving average. But you can see here, right? See this? Look, 21 day, and that was it. And I guarantee if we overlay something, because we've been looking at Bollinger Bands on pullbacks, like look at this, right? Right to there, and then snaps. And now this is actually another buy signal. This is interesting. You see this line, the median line? And let's get rid of all this other stuff, because this is actually really important for people that want to learn. If you're just looking for ideas, this might bore you, but for people that are actually trying to discover their own ideas and get better, which is really what I'm trying to do, is educate. So you see this right here, this line? When you flip this line, this median line, that's a long signal, meaning I've hit this, now I go to here. That's a long signal. That usually means you're going to test up to here. Now, this is also, again, I'll use the adjective interesting. So 31.31. So that just happens to coincide with your second standard deviation, which is what Bollinger Bands are. Bollinger Bands are second standard, well, they're supposed to be set at second standard deviations. Some people set them less, but I stick with 2. So there's a lot going on here, and I would definitely have this one on your radar. Whoever gave it to me, they're on to something here. And you can see how this is going to act. And from here, where would I become concerned? If I flip back below this channel, I'd get out. I wouldn't want to be a party to it. Fubu did the one thing that it needed to start doing. It actually got back in the channel today, but it just has so much work. And you see how this 21 and 50, these are accelerating. And now I'm right against this, and I'm not really getting any push up. I'd watch this here. This is not something I would jump into right now. I'd watch this. I'd want to see much better action before getting involved. So RRR has just been an absolute beast, and one where I have not really been paying attention to it. So here's what's really interesting about this one. You can see clearly, right? You broke this 27 line and how he popped up. Now let's go through this. I remember looking at this before. Here's your pandemic, right? Here's your pandemic. Everything's going to fall apart. Stock goes to, geez, I mean, what do we go to? In March, we were at $2. We were at 32 a year later. So here you are, $28, and then you break out and you just push and you just keep on going. Now you're above your pre-pandemic levels. That's fascinating. The question really is, what do you do now? You know, they're not even close to earning the same amount of money, so it just shows you the demand for stock right now. But look, at this point, you really need to break this $35 level and get above that and run. This is not where I would not want to be buying it in between these two. And if we drill down into the daily, you'll see this a little clearer, right? I mean, it's beautiful. You can just see that. You can just see it. You know, you can almost trade against it where you just, from here on over, right? I mean, you can just see this line. And this is nice too, because what you have going on here is you have these trajectories are actually changing, which gives it more reason that it might break this. And you can see that up here. But until I get above this now, I don't need to be in it. But it does look amazing. MO, look, people are going to buy the dividend. They're going to buy the yield, especially with what happened today with the 10-year pricing. You know, this stock, that's what people buy it for. They buy it for the yield, and it's really that simple. So you can see your break here, your rallying up here. We can look at this weekly because the one trigger for this is breaking a downward trend line. And you're right. You know, you're right there. Look at the tops of these. That's interesting, right? So you're right there. I mean, you really are there. And someone's going to ask me why I'm not using that one. I'm not using that one because it respects this. See, I've got more hits, more spots. That's why I'm using that. This was an outliner, and you could see that outliner was rejected. So this is something that I understand why people are looking at. I still don't have a real warm and fuzzy feeling. The one thing that I will say that gives you some positive, you want to see how it reacts here, right? Usually it might reject again, and the week's not over. But here you are in MO. It's the first time we've got higher highs here, isn't it? And how long? 4 years, 5 years. So it shows you people are putting money here, and they want that dividend yield right now. Ozone was one that we put in the newsletter today, and you know, considering that we fell off, you know, I'm not really overly that concerned about it. What I don't like is, I don't know how that moved over here. What I don't like, frankly, is how rejected a lot of these downward trend lines were today. A lot of these stocks that were trying to break their downward trends, we were rejected today. Now, usually when you have a turnaround, and some people take notes when we do these, but just remember this, when you have a turnaround and you go through a correction, okay, after you bottomed, quote, bottomed, which we, you know, I did that video, and I'll link this video at the end that shows that I do think that we bottomed in the NASDAQ, and I have a video on it. I mentioned that on Sunday in the newsletter as well. But what you can see here is when we start rejecting like that, it raises concerns. Like, we shouldn't reject every wedge, and the majority did today. Snap rejected, this rejected. There's a litany of them, and you need to watch price action. So when something like that transpires, it raises, you know, your attention. However, Friday would have been what we would have construed as the bottom, right? So then you have Saturday, Sunday, which do not count, Monday, Tuesday, Wednesday. This would be the end of day 3. Your consolidations and your moves historically happen. Your rallies historically happen between 4 to 10 days after a bottom. So we could see it starting tomorrow or the next day. And frankly, the way that this market traded today, I was fine with it. And we're going to get into that a little bit. I was fine with it. I would like to have seen better action, of course, but we just didn't get it. So QS, I like, and I like how you're just holding the support. You have the undercut here. See this undercut? See how we didn't undercut here? We've got way too much going on here. Let's just start all over again. And let's throw this up here. Okay. So you see how you undercut here, right? You undercut right here, and then you have, look, let's get rid of this too. Right? Like that's beautiful. And this is what I'm talking about. You had these downward trends today, and a lot of them are trying to break out. And this one just closed right on it, open close. That's like probably the worst close you could get. You need to make sure it stays above this. If it takes it a lower low and starts going into this, you might want to wait a little bit. And of course, you have this enormous right here as well. So I mean, you could even use this one if you wanted. If you want to, use the larger one. And you could see how you reacted to that. You actually fell back in that one today. But I like this undercut of the support. I like this double bottom. And if you overlay the indicators with it, yeah. So you have your 50-day, and we ran right into it. So now you're really trapped. You got to get over this 50-day. So the way to play this stock is right now with the way that it's shaping up. I would wait for it to get over the 50-day moving average and then take a look at it. This was one I called out today, and I'm going to drill down into it. This was our closing line, this 57.33, and we haven't been in a position. Let's get rid of this, and let's get rid of this. So let's, you can see here, you have this line. I don't know, I'm not really seeing the need for this one right now. I'm not really seeing the need for this right now. So these are immaterial. So let's just keep going and let's get to this. So today I saw it clear above this on a very, very simple trade. And that trade was here. And let's get to this. Okay, this was our H, the bearish pattern. We shorted this before. And then we kept bumping against this. It looked to me like today was the day that this was going to go. And this is RIOT. So today it really looked to me like we were going to finally bounce. Now you had this great day the other day with, the move off the bottom. And you can see this lower trend line right here, right? So and this is just the hourly. And you can see how that held. Bonk, bonk. Every time it hits there, it holds. And I think that actually goes. Yeah. I mean, you basically go up there. Yeah. You're close to it. So what you're seeing is this pattern develop, right? And you can see the other trend right here. I mean, you can see it. Hold on. Well, I keep telling people they can see this stuff, and bear with me. And bear with yourself when you're trying to learn how to draw these. I've been doing this over 20 years, so it's a little easier for me. Just the repetition of it. We see how you're right here, but when we broke this, I thought for sure we were getting through this. So really now, and let's get rid of this because we don't need that anymore, and this pattern's over. And we'll get rid of, now I want to keep that there. But what we're dealing with here is this trend. This is a huge falling wedge. We trade above this line, which is what I thought was going to happen today. And I'll show I'll drill down even more. You get above this line, you're going to go. And you're going to go back to the $75, $80 range. It's not a testament to what the company does. Do they make money? Do they not make money? It's just a testament to what's going on with price action. So this was the 15-minute, and I thought this was very clear. I had a breakout here, I broke here, and then I popped over. Then I rejected. And then as soon as I rejected, that was it. I was out. But we have this little trend, and we're kind of holding it. So we could get above there, and we could trade higher. You need to break this line now and that other line that we talked about before you enter, because it's failed. I mean, so at this point, now I need confirmation to break above this. But if you do, it can go. So definitely worth putting on your list. Twitter just didn't really have the oomph that I thought it was going to have. I thought it would do exceptionally well, and that just didn't really happen. So it's very disappointing because this was a clear breakout, and that breakout just didn't really work. So we got stopped out for like a $3 loss on this one. I don't know that I'd want to be playing to this here. Let's throw in these indicators. I mean, this is turning really nasty. You know, you have a, let's get rid of all these horizontal lines and let's get rid of these indicators. So you have a bear flag right here. See this pole? This is your pole. 1, 2, 3. This is also a 3 black crow pattern. We've talked about these before, and then they rally and they bounce up and then they will collapse back down. So you can see that, and now you're really setting up for an H. You're really setting up for a roll. And what you see is, if you look at this, you see this? You really are setting up a, when we clone these, right? And we clone them because we want the same trajectory, because that tells us where we need to be. So you can see this. You have a rising wedge. Rising wedges are bearish. They're not bullish. So I have a rising wedge on top of this H. I don't want to go near this now. This is not something, I must remove that, that we need to be near. So I would stay away from this. I would let this develop. And we can overlay the indicators into it, but that's not going to make it any better. If anything, it makes it worse. So, the 5 and the 8 are pointing down. So right now this needs to consolidate and show me. At least it didn't fill the gap. I would say that you're going to at least fill this gap to 60 and go to the 50-day. So this is setting up more like a short than anything. And you have this huge down channel that's just, we're not breaking anytime soon. Even today, look at this. We opened at the top of this channel and closed at the bottom of it. I mean, it's telling you that you could gap and go lower tomorrow. So just watch this. This is not something you need to rush into right now. And if I was long this for some reason, if I broke this line, I'd be gone. There is one I want to go over, but I'm going to wait to the end because I just want to discuss it in a little more detail. But let's get into this. So, I mean, this is not a name that I enjoy trading. It's just too slow and takes forever. But it's just done exceptionally well, hasn't it? I mean, here you were, 20 bucks. Now you're at 130, and it pots and pans. I mean, it's crazy. So look at the moves here. You're respecting this trend line. You're never breaking it. Where to buy this stock? It's very clear that this has institutional ownership. How do I know that? Look at the buying around the 50-day. Every time it touches the 50-day, people step in and buy it. That's where I'd want to own it, on a pullback to the 50-day. And I think you need to do that now because, you're not going to get much more umph here for a while after coming off of this bar. So if I wanted to be in this, I'd buy it around the 50-day moving average. Fudu, let's get rid of these. I called this yesterday, and if you don't follow me on Twitter, I would recommend it. I do live calls as to what I think is going to happen. And there's a link in the descriptions and in the banner. But when we broke above this line, we broke this wedge, and we broke above this line on huge volume. And when we did it on that volume, I went long. And I thought that we could get to the top of this upper channel. Now this is, just so we're clear, I didn't draw these today. This has been there. So we got to the upper channel and sold off, right? Now look at where we opened. Right at the top of that upper channel and rejected. If you're long and you're wondering where to get out, if you make a lower low tomorrow, you need to get out if you're trying to protect your profit. Because if you make a lower low, there's absolutely no reason why we're not going to 132 and testing. And that can happen as we base. So you need to watch that. But that is something that if that happens and you break that lower low, you need to be careful. So SE, let's look at this real quickly. This SE, look, you're below your 50. The 50 is now, and this happens, support and resistance lines. This is now a resistance line, isn't it? Right? It's no longer support. It was support, support all along. And then what's it do? It flips. And that's what happens with key levels and moving averages. This flipped. That's why I'm so adamant about the Qs that we'll be getting to in a minute. So this is not something I need to go near. If it breaks this 212.33 line, and I break this double bottom here as well, as I can't get above that, this is a pretty clear short signal with this last exhaustion move to here, and it tells me I'm probably heading to this 168. I'm going to test the 200-day, which will be its last stand. So it's not something I need to jump into right now. BABA, frankly, I just don't buy this stock because of all the wacky stuff that happens around it. But if you look at what's going on here, you are below your 200-day, your 21, all these moving averages. I know people are getting excited. Look, you still have this trend line here. And I can redraw this because it has changed. But look at this. I mean, what is your hurry to buy this? And as I always said, the 200-day moving average is the last bastion for the shorts, or for the longs, right? For the bulls. What's going on there? It looks like we're going to just absolutely collapse. So that's not something that you need to jump into. So I showed this yesterday, and it's so funny, man makes plans, God laughs, right? But I kept saying to myself, it's not going to break, it's not going to break. And I was up in the trade, but I actually closed it at the end of yesterday, and then what's it do today? Finally breaks out. And I highlighted these areas to show a point. And why it's so important to understand on different time frames where these lines are and what they mean, right? So in other words, you have a monthly, you bounce here, back here, bonk, bonk, right? We can't break this line for months, right? I mean, literally for over a year, we couldn't break this line. The day I sell, what's it do, right? It just you have to laugh. But, you're forming a possible H here. Now, this negates that today. Okay, you have to see how you close, but the one thing that will not change on this monthly chart is that you'll still have the point here. So now I have a higher high on that. Well, that does get me to the top of this bar. I mean, technically speaking, that gets me to 297 at this point, that could be a test. And you could also have a test here of this 50-week moving average. But you're in a bear flag. And I'm in a rising channel, and rising channels are bearish, but you know what we're doing? You're flipping this, and so you actually have a right shoulder reversal inside the rising channel and the bear flag. Not to confuse the heck out of everybody, but that's what's going on here. So you have a battle here, and people are putting money to work. Now, they just got another contract after hours, so I would imagine you'll see more pressure on this, and it'll trade up, and I'll have more regret for getting out of it. This is one, again, that I didn't put in the newsletter just because of the volatility with it, but we live called this on Twitter at 126, right on this little V break, and the volume that came in, like right around there, it was very interesting to me. See how it just dries up and then bonk? So, I mean, they're clear indications that you learn how to read after doing this for a while, and if you don't have it right away, just give yourself some time. It's like anything else. But you see how you wedge here and then you break out? And this is really important. See how you wedge here and then you open under that so they think make it think you're not going to go, and then you go. And then we have these levels drawn and go, oh, we're not going to break 140. Oh, we're not going to break 159. Okay, and then we just kept breaking them. And there was a person I was talking to about it, and they're like, well, what are we doing? I'm like, well, we're going to see if it breaks this. It didn't break this. It's rejected. Now you have a decision to make. Do you want to hold it or not? What's it do the next day? Didn't get to here. What do you do? And then people are going, today were asking me, well, why did it drop 100 points? Well, it's a thinly traded stock with almost 100% of the short float. Now, I don't care what people say that this is all it's already been covered. This hasn't been covered. I mean, you could have seen that, and you can tell that these things are not fully covered. Because look at what they're paying for the options. They're overpaying for the options. That's why the people that are in the money are selling options right now. And I don't want to get too into this. But look at this. You run right to that line. I mean, that's on a 1-minute chart. Okay? That's on a 1-minute chart to put it into perspective. And that shows you how powerful these lines are. So that when you get to these levels, you can see how they react. And boom, that was it. What happened when you broke it? Down. I mean, this is not, I didn't draw these today. These have been there. So we respect the line. What happens when we don't respect the line? Down. When you broke this line, right? When you broke this line, you had nothing but air until here. Oops, hold on. You had nothing but air till there, right? So the first 60 points were easy. Where was the next stop? Okay, right here. And then just look at these lines for a moment. I just think this is very important and why I stress key levels. Okay, this is where they stop it again. Now it gets halted. Where does it get halted? Right at the support. Next one. Where do they gap it down to? We can move this over here now. You get it. And then where they gap it down to? Okay, they just happen to open it, gap it under, then they just happen to open it right on a key level, right? So off that key level, when you bounced here, this was a clear buy signal. What was your buy signal? This over this, and the drop was a clear buy signal. If you had the guts to do it, and then this would have had to been your stop, or you said, I'm getting out at this level. But once you had that higher high and you bounced off of support, there was your trigger. And then boom, you're in, and what's it doing on this line? Well, it's staying above it. Okay, well, nope, it broke it. All right, I got to get out. And that's pretty much it. So that's why key levels are so important, because they not only tell you where it can go on the way up, but on the way down, it lets you know where it could stop. So what do you do with this now? I mean, we have a triple in 5 days. There's really nothing to do except hopefully you scaled all the way out. This is a nasty, nasty doji bar, which signifies that this could be over. And this is not something you buy right now. But that said, you could look at 15-minute charts and these key levels if you want to trade it, because my range now on a daily bar is 174 to 350. So that's a heck of a range to trade and bang around. But it's not something that you cannot not watch. Look, Spotify has the single largest group of paid subscribers in the world. And I'll just say that one more time. Single largest group of paid subscribers in the world. So it's not going anywhere. Now, does that mean the stock's not going to come in? It sure could come in. But what we did here, and I want to get rid of, let's get rid of this. Let's get rid of all of them for a moment. And then let's just put the 200 in and the Bollinger Bands, because, yeah, that's what I thought. I mean, after you do this for a while, you can actually almost know where these Bollinger Bands are going to be. But see how you have this connection right here? You have the 200-day, you have the lower Bollinger Band, and you have the support line. Look, this is your last bastion here. So you're going to see bulls buy this level. And they're looking for out a year. They're not looking for a quick trade. So they buy the stock here, and then this is their stop, right? And they're gone. Now, that's 15 points. If you can't risk that, you don't buy it until it closes over the 200-day. If it closes below the 200-day, you sell it. It's that simple of a trade. That's it. It could happen 10 times to you. But eventually, this line's either going to go higher and the stock's going to go lower, or vice versa. But that's the easiest way to play this, because that way you're only risking a couple dollars on a $275 stock, and your upside to it is up here. And as we talked about these regressions, the very first regression that happens on Bollinger Bands is right to this line. And I guarantee you that's right where the 21-day is, right? Yeah, I mean, that's right where the 21-day is. That's your first regression. So that's what should happen. Or that's how I would trade it, I should say. So you didn't get to the 200-day on MDB. You broke the lower Bollinger Band, hit 200, 270, 271.88. You break that, you got to go, and then go from here. And before I get to the Qs, this is not something I need to be in, just to finish. Before I get to the Qs, there's one idea I really want to go over. We were in this before, and we made a little bit of money with it, but I think this has massive long-term potential. Let's see here. We'll get rid of this. Put this up here. Turn off these Bollinger Bands, and let's throw these in. Now, this is an hourly chart. Now, they came out with earnings tonight that were just absolutely stellar, and we're going to redraw everything, and we're going to start from the beginning. But this is an idea that you may see in the newsletter coming up, and if you don't get the newsletter, there's links in the descriptions in the banner. But you can see these lines and these levels, right? And let's turn off the indicators for one quick moment. So really, what I need to have happen is $68, $69. If I can get above this, or this line, right? If I get above this, and right now after hours, I think we're at $67 roughly. Hold on one second, I'll get an exact price. So it's 6 o'clock at night, and right now we're at 66.5. So what I'm looking for, right now you're right here, but we're looking to get above this. So when this breaks, this could really go. And this, you could see this in the newsletter. Their earnings were staggering, and on top of that, we're just building an enormous base here. And notice how this was the bottom, and then we undercut here, and now we're back to it. This is actually a double bottom that's forming. So put this on your radar. Now let's get into the cues and what's going on out there. I think this is really important, and we're going to get into the daily first, and then we're going to go from there. And let's get rid of those averages, and let's get rid of this. Throw this back over here. These are all just notes that I'm not going to get rid of, and we don't need this. And this double bottom does need to hold right here. So what transpired? You see this upper trend line that we drew? This has been there for what, weeks, right? Look how it hit there today. And what did it do? It rejected it. It's not what we want to see. And then it closed below this line, or on this line. And they close on this line for no other reason, I'll clean up my language, but to screw with you. Because you look at it and go, well, if you broke, then I knew which way we're probably heading. So they don't break it. And they have it come up. And if you think institutions and large funds don't play these games, you're wrong. They do. So you run up to here, and then you reject, right? So now you have this little wedge. Look, you break this lower low, and we could see pain tomorrow. Okay, I'm just saying. Does that mean we're taking out the bottom? No. What I'm saying to you is, and I've been saying this in the newsletter, and I'll say it right here. We need to get above the lower trend line ASAP. Okay, this is where your trades are not going to work as well as they once did. You're in a chop market, and you hopefully can see this other line that's been developing, right, that we really don't want right now. And I'll show you why we don't want this right now. I usually don't care if I'm in a falling wedge. And you can see the other side of it over here, but here's your real issue. These are rolling. And the NASDAQ is not going up with it pointing, with the 50-day pointing down. It's not going to happen. It could consolidate and then readjust and then push higher, but that's not happening right now. So we really need to be very cognizant of that and what's going on here. And let's just drill down into this in the hourly for a minute. Again, I did say we bottomed, and I'm going to link that video again for those that haven't seen it, where I walk through why I think we bottomed. But we highlighted these spots, right, on the hourly. Well, I mean, if you put this chart up and you were using these alerts and these levels, ooh, that got really big, didn't it? So you can see right here, right, what did we do today? We ran to it, we rejected. Right there, you know that anything that you're putting on the day has less probability of working. And let's get rid of these indicators for a minute. And, we don't even need the orange, the red. You can just look at bars. Right? Just get rid of all the noise and just look at it. I mean, 1, 2, 3, 4. You think you're in a trading range? 1, 2, 3, 4, 5. I mean, you're clearly in a trading range. And, we had the retest of the bounce. We had the undercut here that formed the double bottom. This is support. This was the first support flipped. We need to break this hourly. 4 to 10 days is when it's supposed to happen. Tomorrow is the 4th day from the bottom, right? So 1, 2, 3, right? So tomorrow's number 4. So that's when it's supposed to happen usually, or can happen between 4 to 10 days. If we don't bounce in the next 4 to 10 days, we have an issue. But I personally think that we do bounce. But you undercut here, and then you're trading around, and we really need to get above this. So that's it. I will put a video at the end of this that will show why I think we bottomed. I believe a lot of people have already watched it. It's very helpful to understand. As always, if you could do me a huge favor and please like this video. I'm trying to educate people on what it takes to truly be successful, consistent, and profitable in being a stock investor. And there's just a lot of noise out there right now. It's how I got myself into this. Just looking at what was out there and just seeing, where they show people on mountaintops trading for 2 minutes, and it's just completely unrealistic and a bunch of crap. So I'm just trying to educate people. I was fortunate enough to have this education and to be trading professionally for over 20 years. So I'm just trying to get people focused, at least pointed in the right direction. I would appreciate it. Everyone have a great evening, and I look forward to talking to you soon. Questions, through comments in the YouTube or on Twitter or through the newsletter or email, I answer everybody. Have a good night.